So it really, when it boils down to it, it just makes sense. I was talking to a close friend of mine, a colleague, confidant, and he was telling me about his cousin who was visiting. They were visiting for the weekend, and while they were visiting, they happened to get into a car accident. His cousin and the father of her children. So they get into a car accident, and I've been in insurance for going on 11 years. It'll be 11 years this month. And the first thing that came to my mind was, do they have life insurance? That's the first thing I think about when I see a car accident. That's the first thing I think about, honestly, if I'm having a conversation with somebody and they have children and they say, I'll do anything for my children, because what it comes down to is really, and I asked all the questions except for the question that I wanted to ask. I asked, where the children were, who was watching them, what was going to happen to the children next. And what I really wanted to know is, was there life insurance? Because these children, if and they're both under 10 years old, these children now under 10 years old are going to have to face the rest of their life without either of their children. The shoe game is real life insurance. I see you, Jared. And it is an investment, contrary to popular belief. But these children are going to have to go the rest of their lives without life insurance. I mean, without their parents. And the only thing, not that it replaces their parents, but just think of all the things that you have planned for your children. The tournaments, the vacations, they live under your roof, the next birthday, the travel plans, the trips, the college, the weddings, all the things that you planned on paying for, that you thought you had time for to build up to, that in an instant are gone. And again, they were on a trip. And it brings me full circle, because I actually had a client earlier this week that had a policy with me, let the policy lapse, and we were in the process of putting another policy in place. Yes, either parent. So rest of their life with either parent. I had another client that was we were in the process of putting another policy in place, and because it didn't draft on his payday and he had an upcoming trip planned, he decided that it needed to be the next payday. So now he's going another 2 weeks without life insurance. And it may not seem like a big deal to a lot of people, but being in the industry, and when people say things like tomorrow's not promised, I don't understand. And I'll do anything for my children. I don't understand how that decision makes sense, because it's really the only thing that will pacify, that will even begin to feel, that will put your children in a position where they don't become a financial burden on somebody else, because somebody's going to have to take care of them, the system, your loved ones. And if somebody else has to take care of them, they're going to need resources. So there's a number of different ways. I'm not a big fan of term insurance. I'm whole life, specially designed mutual insurance that you can use now to enhance your quality of life. Truly borrow from, not an IUL, but truly borrow from within 30 days and earn compound dividends for retirement. That's really the type of life insurance that I swear by. But if you're not going to do that, if you're not going to make that type of commitment, the least you can do is have term insurance, because now these children have to grow up and figure out high school, figure out college, figure out buying their first home, figure out birthdays, grandchildren. They have to figure out they have to figure out a lot of things without their parents. And I'm sure their parents were like, I'll just work, I'll save up for it, I'll get life insurance next month or when they're at a certain age. But like I said, tomorrow's never promised. And we say things like that, but do we really believe it, or do we really live by that? Because if we did, then it would be no question. It's not really a big sacrifice. And yes, you can catch up on those payments if you miss a payment, but those are situations where you look at it as a bill, as a line item, as an option, as opposed to a priority. Like, you don't miss your phone bill. Most people have cable. Most people have cars. When I mean, I'll make the argument that you'd be better off with public transportation or a rental car when you needed it, and have life insurance to prepare for the unknown, and everyone would be in a much better situation, and you can build up to it, leveraging the life insurance to put you in a position to live the life that you want to live. But it's just tragic, the amount of people that look at it as a line item and as an option. But it's by design that the things that we're required to have, like homeowners insurance, car insurance, the things that protect other people's interests, are required, and we break our necks to make sure that those things are paid. But the only thing that protects our loved ones and protects the people that we care about, that we said we would do anything with, is life insurance. And it's not required. Sure, you get it from your job, but that's just like renting the insurance, because if you lose your job or the job decides that they no longer want to offer that benefit, now you're without insurance. So you should definitely own your own life insurance, because not only does it protect you, it protects the people that you love because of the level of uncertainty that exists. And it's, again, it's the first thing that I see. The first thing that I think about when I see a car accident is, yeah, it's tragic, especially when I see ambulances. But I always wonder if they have life insurance, especially if it's fatal, because nobody leaves the house planning on getting into a car accident. Just like that colleague, his people that were on a trip didn't go on a trip planning never to go home again to their children that were with their grandparents. Now their grandparents have to have a tough conversation, and now the house has to get sold. They have to transition to somewhere else, because I'm guessing that whoever takes care of them, aunts, uncles, grandparents, aren't going to relocate to that neighborhood to minimize the disruption in their lifestyle. So all those things cost money. We've all moved, we've all had changes in life, and it's expensive. And I don't think there's an age where I have life insurance on both of my children, 6 and 11, and have since birth. And again, whole life insurance is what I swear by, especially designed because it earns compound dividends, and I can use it as a savings account. And if I need to dip into it for tournaments, for trips, to pay off debt, put a down payment on the house, to do anything, and just DM me. We can talk about all of these things. But I think from birth until probably, depending on your lifestyle, probably until late 60s, early 70s, excuse me, this is the best route to go, because you're creating leverage. And leverage gives you the power to do things that you couldn't do without the leverage. And with whole life insurance, it's OPM, and OPM is other people's money. So they talk about it in real estate and acquiring assets, but it's the ability to use the life insurance company's money to stand up your lifestyle, protect your family at the same time without disrupting your cash flow. And you completely control how the money goes back into the life insurance. If you borrow it, it's the difference between good debt and bad debt. But I think from birth, there's no, yesterday is the best time to do it. Today is the second best time, because tomorrow's not promised. But there's no age, but you can do it from birth up until, I would say, it becomes cost prohibitive depending on your lifestyle. And again, in the mid to late 60s, early 70s. But up until then, we can do a free assessment, go through your situation and figure out how to maximize your cash flow, because that's really all it is cash flow maximization and putting yourself in the best situation financially as possible. Because everyone says that your income should be the third income in your household, meaning your money should go to work for you. And there's no easier way to do it than parking in life insurance, because you may not be in a position to buy real estate. You may not be in a position to buy land. You may not even be in a position to put money into the market, but everyone is in a position, if you have a steady income, to put money into life insurance, because you're not sacrificing that income. It's not set aside money. It's money just like you put money into a savings account, into a bank. It's money that you're just banking. And if you need to, no different than you go to a bank, you can go to your insurance company and borrow against the money that you parked in your insurance policy, which is where the leverage comes in. And yes, well, you're not borrowing your own money, because you're borrowing your life and the borrowing from the life insurance company while your money stays safe in the coffers, which is why they continue to pay dividends. Unlike a savings account where you pull the money out, it's no longer earning for you. So you disrupted the growth of your money if you do that in the savings account, because a lot of people are like, well, why wouldn't I just do it in the savings account? And that's why, because it's no longer working for you when you borrow from, or when you pull money out of your savings account, unlike when you pull money from your insurance policy. The other huge difference is that any interest that they pay you on your savings account, they're going to send you in 1099 at the end of the year. So you're going to pay taxes on that money. The money in your insurance policy grows tax free. So you'll never pay taxes on the growth. And again, that's the difference between good debt and bad debt, because when you borrow from it to go acquire another asset that's generating revenue, you're not going to pay taxes on that. And in fact, if you borrow from it, dump money into your business and pay yourself back from that business, that interest becomes tax deductible. So it's a win-win on multiple levels. And I know I'm going into the weeds, but the other difference between the insurance policy and the savings account is if you put $50,000 in the savings account and you pass away, your children, your loved ones are going to have access to $50,000. If you put $50,000 into an insurance policy, depending on your age, it's probably easily, and don't quote me on this, this is where an individual assessment comes into play free of charge, because I love having the conversation, because I understand it's a foreign language and I genuinely want to help. But that's going to really provide a tax-free benefit for your loved ones, somewhere in the area of 500, 750. And if you're really young, probably $1 million. But again, that money is working for you, earning a dividend, compound, tax-free for retirement. It's protecting the people that you said you would do anything for, that you said meant the world to you. And it's stewarding your funds. I mean, the Bible says a wise man provides an inheritance for his children's children. And I just want you to live better and to provide an inheritance for your children. And if I can help you do that, please DM me. My phone number hasn't changed since 1998. So if you've had my phone number, then you still have my phone number. So reach out to me, text message, DM, whatever I can do to help provide any clarification on anything that I discussed today. Please reach out. I would love, love, love to be the person, to be the conduit that bridges the gap between something that people shy away from and something that I wholeheartedly believe that everyone should have. So DM me, call me, smoke signal, carrier pigeon, however you get it done, just get it done, because somebody's depending on you. And if somebody's depending on you, you owe it to them and to yourself, because it'll grossly enhance your quality of life to just have the conversation at the very least. But I promise you, once we have the conversation and look at the situation, that you'll understand how this makes sense. And again, Jared, the children's riders are for term policies. Again, if you have to go that route, then definitely go that route. Children's riders, it's a great place to start. But that's that company that's one of the oldest MLMs in the world. I wouldn't recommend you get insurance there, because it doesn't have living benefits. And their whole mantra, buy term, invest the rest, is antiquated, and it doesn't consider the benefits of a properly structured, mutually own whole life policy. But it works if that's what you have. Otherwise, let's talk about a solution for you and for your children. You should have insurance on you. You should have insurance on them that you can pass on to them, that they can maintain, and just give them a leg up. Because if you didn't know to do it and they know to do it, just think of how many things you look back and said, "Oh man, I wish I would have known that sooner." A lot of my clients say, "I wish I would have met you 5 years ago, 10 years ago, because my life would have been dramatically different." Give your children that leg up. Give yourself that advantage. Help me help you. Be well. Enjoy this lovely Tuesday evening. And again, at the risk of being redundant, if I can, I will. So reach out.